Hey, my name's James Dawson. Welcome to my channel. I know you're going to kill me in the comments. It's inevitable with this type of video, but HSBC have just dropped their interest rates on 2-year and 5-year deals. Now, this is good news because HSBC are a major lender in the UK, and this is potentially, in fact, it's also already started some smaller lenders to follow suit. So let's talk about that in this video. Let's talk about the numbers, what's going on. Have mortgage interest rates peaked right now? Before we jump into that, make sure if you haven't done already, subscribe to the channel and hit the bell notification. 6,200 people have subscribed now. We're on the way to 7,000. Can you help me get to that 7,000 a little bit quicker? And we're getting 80,000 views each month now, which is incredible. So thank you to everyone that watches on a regular basis. Help us get more views by smashing that like button. Go on, do it right now. I'll wait. Smash the like button. Let's get 100,000 views next month. So, HSBC, one of the biggest lenders in the UK, a huge international bank, have pushed interest rates down. Now, that is on the back of the fact that next week, I think it's next week, if not, it's the week after. I think it is next week. The Bank of England meet and they're expected to raise interest rates again. And so that's interesting to see that HSBC know what's coming, but they're still pushing down the interest rates. Now, the Bank of England rate is an indicator on what might happen with interest rates, but there's something called a swap rate, which is more important. And so the swap rates at the moment for, let's have a look here. Just want to make sure I get my details right on this. Okay. Yeah, so swap rates for 2 years, and these are where the banks get their money really, is 5.57. 2 year. And for 5 years is 5.78, which is down, right? And so that's what banks are really looking at here, not necessarily what the Bank of England are doing. Now, what we're saying here in this Telegraph article that I'm reading right now, but this is in tons of news outlets as well, is that the base rate was, they were expecting some people for it to peak at 6.75%. I didn't hear people saying that, but that's what they're saying here. And so what are the HSBC rates? Let's just get to the crux of it. That's what you really want to know. So HSBC rates, HB, oh. HSBC 2-year rates. They were at 6.24%, and they've dropped to 6.14%, which is a decent drop. That will make a difference to a lot of people, depending on the size of your mortgage and stuff like that, but it's good. And where I feel this could be really good news is that we must be near the peak now. Like we've got so many interest rate rises that we've had. Inflation is starting to shift a little bit, not quick enough. Other countries, they are seeing better data. So often we'll mirror what happens in America eventually. There's a bit of a lag on that. But look, if they feel that they're doing this, HSBC have got enough data, more than someone like me or you have. And so they're saying for their 5-year deal, it's gone from 5.84% down to 5.64%. Now, it's not going to change your life totally, that small percentage drop, but what it does show is that rates are near the top. For sure, they're near the top. They're not going to be dropping their rates if they feel the Bank of England are going to go up 0.5% next week and then 0.5% the month after. That's just not going to happen. It's too much admin on there. And what the Telegraph are talking about here is that other lenders are looking at this, and HSBC like to be competitive in the market. When you're competitive in the market, then you're going to get more deals. And Halifax and Nationwide, they are competitive with challenger brands that they've got. One, for example, is called the Mortgage Works. So you might look at it and say, well, Halifax and Nationwide aren't that cheap. But look at the other sub-brands that they've got, and that's where they're pulling in the business, and they go a bit more aggressive on rates with the Mortgage Works, which is a big buy-to-let lender for sure. So this is good. This is not great, but it's positive to see that interest rates probably have peaked now. The base rate is definitely going to go up a little bit more, but who cares about the base rate really? I more care about what's the rate that I pay, what's the rate that I can get from a bank. That's really what I want to look at, more so than what is the base rate with the Bank of England. And so this is really interesting stuff. This week we've got the Federal Reserve. They're going to be doing their interest rate meeting in the next day or so. So we'll be talking about that, because we often, as they say, follow the Fed. We won't, because our interest is, our inflation is that little bit less controlled than theirs at the moment, but it shows where we're likely to end up. And so if the Fed do a pause, that's potentially really good news for us. And eventually we'll get to that stage. I think this month we will, well, August, we will have a rise, but potentially September, if the inflation data is looking a little better, this is good. So let me know your thoughts. Where do you feel interest rates are going to peak out at? What do you feel lenders are doing when they're dropping the rate, when the base rate is very likely to go up? What do you think the idea behind that is? Well, I'd love to know your thoughts and any questions you've got in the comments. Does it give you a bit more optimism as well? So if you feel that now you know what the rate is, and I'm going to make a video on this, right? I was thinking about this on the weekend. The people that do buy to let, if you already have deals, you could get in a right pickle at the moment. You could have a real nasty shock for yourself because you got that deal, worked out all your numbers at 1%, 2% interest rates, right? And so you've got that shock to come. Whereas if you buy a new deal, if you buy a new buy-to-let deal right now, then I don't see problems with that, because your new deal is worked out. The numbers have got to stack at today's interest rates. I don't see interest rates doubling from where they are now. If you bought at 2%, they've tripled pretty much. So you've gone through the worst of it. So the new people into the market can buy in a limited company. And it's actually quite an advantage, I feel. If you've got some cash, you can go into a buy-to-let, you can negotiate hard with somebody, you can get an interest rate fixed at 5 years, where you know what you're going to be paying, and then you just need to work out that you've got some income and cash flow coming in from that property. I think it could be very, very good times for people looking to get into any kind of market right now. And I'd love to know what your thoughts are on that one as well. A little side tangent at the end there. But do check out all the other content on my channel. Let's get 100,000 views. Let's do it collectively together. It's not me watching this, it's you. So smash that like button. Let's get some more views. Let friends and family know about this channel. And do check out all the other content on my channel, including this video right here.